Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's November the 10th. This will be our chart lesson for today. Tomorrow is Veterans Day. Although the market will trade normal hours, uh, it's likely to be slow and low volume, and it looks that way somewhat today. Could be that a lot of people have taken, they've used the holiday for Tuesday, knowing that it'll be kind of slow for a 4-day weekend, taking off Monday as well. Um, this is not, I mean, this is not a extremely low volume, but it's you can see there's not much movement, lots of little bars. It looks kind of like a holiday kind of day. And although the market will be open regular hours tomorrow, it's probably going to look very similar, if not worse than today. I mean, nothing's ever 100% when you're trading. So anything's possible, and it might turn out to be an extremely good day tomorrow, but I'm expecting it will be something similar to this or maybe even worse. So I'm going to come in the morning. I probably won't trade full time. If I trade long enough that it's worth doing a chart lesson, I will do a chart lesson. But if you don't see a chart lesson tomorrow, you'll know why. I'll definitely do a midday chart. Put that on the website since I will be here and looking at everything. And like I said, it could turn out to be a great trading day, and I may hang around and may do a chart lesson. But if you don't see one, you'll know why. Um, so let's talk about today's trading. Not a lot of trades here. You see several of them are green. It's mostly all buys today. There was an upward bias, even though we are in a trading range here. We've traded up into this level. We've kind of been in this level for a few days. But we traded up here, and I think the overall bias is more to an upside now than to the downside, which we had a few weeks ago when things were selling off. And like I said, we're back above 2,000 now, headed towards 250. So this is just the market that never quits. It just keeps going and going and going. So, but anyway, let's just go ahead and talk about the trades. Won't be much to talk about today. We'll wrap this one up. But for those of you that did trade or still trading, here's what I saw today. It's for the most part a range day, and it turns out it's a bigger range. Early on, I was looking at this range right here, and you can see the clear highs. They might have been a little bit lower than this. You seem to have got more touches right across here. But when I came in, these were the highs right across here, and most of your touches for the lows are right across here, which is the um, open from Friday, and you can see that continued to be an important level of price. And then the midline pretty much right in the middle of that. You can see prices acting as support and resistance on both sides. So that was what I was looking at. If we broke higher, you see a measured move of that is to right there. But you could also do the measured move of the first leg up, which is that, and then you drag it up, and you basically get the same thing there. So within a tick or two, you got two targets there that both give you the same high. You can see that's exactly where we traded to, maybe a tick higher than that, and then prices have corrected since then. So gave you a really good target. Continue to use that strategy. Um, and if you don't understand that strategy, watch some of our videos um, until you can kind of learn what we're doing. We're just measuring one leg and looking for the second leg. And there is a manual on the site for 20 something bucks. It teaches that as well if you wanted it. Um, nothing we do, you have to really buy anything. If you don't want to, it obviously helps sometimes, but none of that's required. Most everything we do is in the videos. If you watch enough videos, you can probably see it. So um, just something to think about. But anyway, that was what I was looking at for a target, and that's pretty much what we got. And then I've seen one iffy trade since that point, and just not much has happened since then. But here's the trades I saw right around this early set, a little after 7 o'clock. The first setup I saw was really almost 8 o'clock, really. The 7 o'clock, I think, was right in here when this is moving from here down, and there's nothing happening there. So this was your first trade that you really could take after the 7 o'clock hour. Um, and it was the first break of what I saw as this channel working up. And it you Okay, I'm sorry, I already had an interruption there, but this was the first break of the channel. You're looking for a new high. Notice the swing low, and then we tested it once, twice more, that double test rule, and then it trades up, and you're looking for a new high. So I liked entering there. When it tried to go lower one more time and bounced off that same level across there, that gives you a second entry off the low. So, and there's still a little bit of room. And you know you're going to probably get a new high, or at least an attempt at one. I went back and forth about whether or not to make that one green. At this point, we were still, if you push this over, you can see we were trending up at that point. So that makes that look a little better, and it would have worked. You would have had to kind of ride it out as it chopped up there, but it would have worked. So um, looking at the price action at that point, I like those two entries to the upside. And then, of course, we started selling off. Um, this one would have been real. This is notice this is a new high pullback, first entry pullback, second entry. This would have been very enticing. In fact, I had to look at it really closely. Prices actually broke below, lower first and then tried to go out the upside. I actually had a buy stop there and would have gone long had that gone higher in that same bar. But when it didn't and it couldn't get above there, and you've already had your break and a new high, this was a little bit more suspect. So I thought I'd wait and see what happened, and you can see it broke higher and then kind of traded back down. And if you did use a limit order there, you might have gotten out of this trade. But when this closes a doji, if you were in this thing, I would have gotten out and taken a tick or so. You could have gotten out with a tick or two, maybe probably the most you would have gotten. But I would have exited that thing because that's not looking good. This should have bounced if it was going to go higher. And this is more of a midline in here. And at that point, I had the trend. This channel line would have been down here at that point. And so you're really more near the upper side. Um, it still would have looked like a midpoint across there, and you might even look at it like that. If you do, it's still kind of a measured move almost. So, but anyway, if you did get long there, you had to exit. You couldn't hang on to that one. Just no way. Uh, and it ends up turning down. And there's a second entry short there. And notice how everything has gotten below the EMA there as well. Notice how we're all above here. Now it's gotten below. So you might have considered this short here. I still think it's too choppy. But notice that's the failed break to the high side, and you're looking for prices to go lower. So a real aggressive trader might go short there. I'll go ahead and circle that one short. I didn't like it. And I drew this one in burgundy because I didn't like it for the reasons I just talked about. But I could see where people could get tricked there because I wanted to go long there myself. But it didn't set up properly the way I liked it. And then you bounce down here, and there's not, even though there's a little bit, even though this is an important area, you didn't really have the range in place for certain, at least the lows of it yet. So I think this was a little aggressive. There's not much room between there and the EMA, and you see it tried to turn down from there, although it worked through. So I think you had to be real aggressive to buy that. I don't like it. And then again, you're working down, and there's another second entry long here, but notice how it looks so much like a repeat pattern of this. So again, I didn't like it, even though it worked. I think you were better. If you want to be aggressive, it's there. And you're looking for a new high after the break of this, for sure. And so if you wanted to be aggressive, you could take it, but I think you were better to wait for here till it comes back and tests that same midpoint again and then turns back up. And even then, you didn't have a whole lot of room here, but by that time you're looking for a breakout to the high side. You don't know that it's going to go that far, but you figure you'll probably get a scalp out of that. And it does go higher, and then it pulls back, and you get a failed second entry short there. Again, I almost made this one is real close between being blue or green. I almost made this one green simply because we're so far away from the EMA. These failed second entries work much better when they're closer to the EMA, because when you get up here, on most days it's not going to continue to go much further, and you see that it got enough for a scalp, and then it backs up. And so I think you were. Again, it's just like right there, borderline. But I was looking for a measured move, and I figured even if it backed up, it probably wouldn't take my stop out if I didn't scalp out first. So, but you see, it worked. And then you do get the break. You back up. You get a first entry, pull back, and you get a second entry. But again, it's starting to look like this stuff here. And so, I think it's too many stacked up bars and dojis to take a chance of going long right there. So just sit tight and wait and see if you get that double test. And there, notice in your low, you tested it once, you tested it twice. Now you got a reason to get long. And you see what it did. Quick, easy scalp. And you might have, this is one where you might think about going short, but with all that overlap, even though you got a measured move, it could still go higher. So with all that overlap, I think you have to wait on the second entry, and you never get one. It just shoots and comes on down. And you set up here for a second entry, but you can't go long way down here. Um, but again, notice you got all that support right across there, and you get the little double test. So there's a second entry long right there. Again, it's a little iffy, a little risky, so I only marked it in green. And that's really all there has been. There really hadn't been anything else that sets up today. It looks like we're trying to get some more stuff going on here, but I didn't mark anything past that point because there's really been nothing. So just not a very good day. Real slow, real low volume. So not much more to talk about than that. Again, make sure when you've got this stuff going on that you're drawing your short-term trend lines. And you can see that one there, and you get the break, and you tried twice to get that new low, and it fails, so that's a reason to go long. And then this might have led you to take a trade there, but you got this one working down. You get this break, move to a new low, and now you're headed in the other direction. So looking at it like that, you might have taken this one or maybe even that one. So again, they're not great setups, but if you look at the big context and you know what prices are doing, then it always makes more sense. Obviously, prices are trying to make a new low here, but when they test that new area twice and fail, we know the rule says you're probably going in the other direction. So, but that's what I saw today. Nothing else much to talk about. Remember the measured moves that I talked about early on. Those are important because they help you understand that you may want to stay in it till it gets to here, and once it gets to here, you better be real careful about going long again. Because you may be headed in the other direction. And notice where all the important areas are today. The important lows today, this was the low of the day, and it's very close to the low from Friday. And then this yellow line here, where the low of this range is, was the open from Friday. And notice how that was an important area that held prices. And then this line, this midline, was the open today. Of the market. And so, it became an important part all the way across there. Actually, that's not the open from today. That's the previous day. I'm sorry. The bigger line is today's open, and the small, I got them backwards. So the smaller line is the previous day. So I got that one backwards. I apologize. So this was the opening price today. It was actually the overnight open. And then this was the opening from the previous day. And you can see how it was an important area. And then this green line is the highs from the previous day. And again, it's kind of an important area. You can see that. So these lines are important. So and these are, that's not the one I'm looking for. These are areas that I wanted to put this on here for you. You can see the current day's open high low and the prior day open high low. That comes standard with NT, so you've got it in yours if you want to add it, and you have to adjust it a little bit so the line is flat so it doesn't move around. If you just go with it standard, I think it actually moves around or whatever with the new highs and new lows and stuff like that. So we're only interested in the high of the day and the low of the day. So as it moves, we want the whole line to move. So anyway, I hope that's helpful to you. I hope you had a good trading day if you traded today. We'll see how tomorrow goes. Again, may or may not be a chart lesson depending on how things go. And irregardless, we'll be back to do it again Wednesday. But I'm going to wrap it up for now. This is Mack with PriceActionTradingSystem.com, and we'll see you.